Welcome back to the MbaguMedia Finance Podcast. Today, we're diving deep into a company that has seen some truly wild swings, Beyond Meat, ticker symbol BYND. It's a name that many of you are probably familiar with, especially if you follow the plant-based food trend. We're going to explore whether its recent surge was a fleeting dead cat bounce or if there's a genuine opportunity for a rebound.
Absolutely. The term dead cat bounce itself is pretty striking, isn't it? It describes that sharp, temporary recovery a failing stock might have before continuing its downward trend. And honestly, Beyond Meat's stock performance has felt like a textbook case study of this phenomenon recently. Just in mid-October, we saw its stock jump by an incredible 1,000% in a mere 4 days.
1,000%. It's the kind of move that makes investors sit up and take notice, and likely caused a lot of excitement. But, as you hinted, those gains were very short-lived. Most of that surge quickly evaporated, giving back a significant chunk of the gains. The underlying issue, it seems, is that this upward move lacked any real fundamental support. It was a spike, not a sustainable climb, which is precisely what the dead cat bounce describes.
Exactly. And this kind of volatility can be incredibly dizzying for anyone watching. It really makes you question what's truly happening beneath the surface. Now, here's where it gets particularly interesting, and perhaps a little concerning for some. Beyond Meat's market cap has shrunk dramatically, down to around $724 million.
That's a stark contrast to its peak valuation, which, if you recall, was just over $14 billion shortly after its 2019 IPO. So, the central question we're wrestling with today is this steep discount a sign that the stock is oversold and ripe for the picking, a genuine buying opportunity for those with a long-term perspective?
Or, is it a flashing red warning sign, telling us to stay far, far away from a company that's clearly struggling? To try and answer that, we're going to dig deep, exploring the pros and cons of Beyond Meat, and from that analysis, paint a picture of what the next 3 years might hold for this embattled company. Have you ever seen a stock behave like this, a dramatic surge followed by a rapid decline? It's a pattern that always sparks debate and, for many, a healthy dose of skepticism.
It's a pattern that always gets people talking, that's for sure. So, let's start by dissecting the headwinds, the compelling arguments for why Beyond Meat continues to struggle. The most obvious and persistent issue, and one we've seen discussed frequently, is the trend of declining sales and market share.
That's right. Beyond Meat isn't just failing to grow, it's actively losing ground. Competitors are emerging, both established players and new entrants, and in some segments, even traditional meat products are proving more appealing, often at a lower price point. This isn't a general statement, we're seeing weakness across specific product categories, whether it's their burgers, sausages, or newer items. The demand just hasn't materialized as hoped, leading to a shrinking slice of an increasingly competitive pie.
And this decline in sales directly impacts the company's most significant challenge, profitability. Beyond Meat has consistently struggled to achieve profitability, reporting net losses quarter after quarter. The high operating expenses, which include substantial investments in research and development for new products and aggressive marketing campaigns, continue to eat into any potential gains.
It's a difficult cycle to break, isn't it? The need to invest in future growth clashes with the immediate pressure to become financially sustainable. When you're not making money on the sales you do achieve, and your costs remain high, the bottom line looks pretty grim. It's a tough spot to be in for any company, let alone one trying to innovate in a rapidly evolving market.
And the competitive landscape? It's only getting more intense. The plant-based meat market, once a niche, is now incredibly crowded. You have direct competitors like Impossible Foods, which has also faced its own challenges but remains a significant player.
Then you have the ever-growing presence of store brands. Major grocery chains are launching their own private label plant-based options, often at much lower price points. This creates immense pressure on Beyond Meat, not only in terms of market share but also on pricing. It's a race to the bottom in some respects, where differentiation becomes harder, and margins are squeezed even further.
Beyond the business metrics, there's also the crucial element of consumer perception and taste preferences. Despite years of development and marketing, significant hurdles remain in widespread consumer adoption. For many, the taste, texture, and overall eating experience of plant-based meats still don't quite measure up to their animal protein counterparts.
And there's also the ongoing debate about health benefits, with consumers questioning whether these highly processed alternatives are truly a healthier choice. Some market research suggests persistent skepticism, and for a segment of the population, there remains a certain ick factor or a general hesitancy to embrace these products. It's a psychological barrier as much as it is a taste or nutritional one.
Furthermore, Beyond Meat faces challenges in its distribution and relationships with retailers. Securing prime shelf space in supermarkets is a constant battle, especially when you're competing with established brands and private labels. Maintaining strong relationships with major retailers is vital for consistent placement in sales.
And when sales figures are sluggish, retailers may be less inclined to dedicate valuable space to Beyond Meat products. This can lead to issues with overstocking, product spoilage, and a general difficulty in managing the supply chain effectively. It's also worth touching upon the company's management and any strategic missteps that may have contributed to its current predicament.
While we won't delve into specifics without deeper research, it's undeniable that leadership decisions, strategic pivots, or even changes in management can significantly impact a company's trajectory. Past choices regarding product development, market focus, or expansion strategies might be coming home to roost, adding another layer of complexity to the company's turnaround efforts. It really paints a picture of significant headwinds, doesn't it?
It certainly does. Given these significant headwinds, it's easy to see why many investors are skeptical. The narrative of declining sales, persistent losses, intense competition, and consumer hesitancy paints a rather bleak picture. But is the picture entirely bleak? Let's consider the other side of the coin, the potential upsides and catalysts that could spark a recovery for Beyond Meat.
That's the crucial question, isn't it? Let's explore the bull case. One of the most compelling arguments for a potential turnaround lies in the concept of an undervalued asset. We've already highlighted the dramatic drop in Beyond Meat's market capitalization, from over $14 billion to around $724 million.
This represents a substantial discount from its former glory. For value investors, a company that has fallen so far from its peak, especially if its underlying assets or market potential are still considered viable, can present an attractive opportunity. The idea here is that the market may have overreacted, punishing the stock far beyond what its future prospects might warrant.
It's the classic turnaround situation, where the stock price reflects maximum pessimism, and any positive news could lead to a significant rebound. Despite its current struggles, the plant-based protein market itself is still projected to experience significant long-term growth. Global trends show a clear shift towards alternative proteins, driven by concerns about health, sustainability, and animal welfare.
If Beyond Meat can successfully navigate its current challenges and implement effective strategies, it stands to benefit from this expanding market. The question isn't necessarily whether the market will grow, but whether Beyond Meat can capture a meaningful share of that future growth, especially against an increasingly crowded field. Product innovation and diversification are also key areas where Beyond Meat could find its footing.
The company is actively working on developing new products and reformulating existing ones to better meet consumer demand and differentiate itself from competitors. This could involve exploring entirely new categories beyond burgers and sausages, or perhaps creating products that offer a more compelling taste, texture, or nutritional profile. Any breakthroughs in R&D or successful new product launches could provide a much-needed boost to sales and investor confidence.
Strategic partnerships and the exploration of new sales channels are another avenue for potential growth. Beyond Meat has had success in the past with partnerships with restaurants and fast food chains, and there's potential to reignite or expand these relationships. Furthermore, exploring new international markets or focusing on specific channels like food service versus retail could open up significant opportunities.
For instance, a major international deal or a renewed partnership with a prominent quick-service restaurant could dramatically impact sales volumes. On the financial front, Beyond Meat is undoubtedly focused on cost-cutting measures and efficiency gains. If the company can successfully implement effective strategies to reduce its operating expenses, streamline its supply chain, and improve its manufacturing processes, it could significantly improve its financial performance and accelerate its path to profitability.
Any announced restructuring or efficiency initiatives that show tangible results will be crucial for regaining investor trust. Finally, we can't overlook the power of brand recognition. Even with its recent struggles, Beyond Meat remains a household name in the plant-based space. This brand awareness is a significant asset that newer, smaller competitors may not possess.
If the company can execute a successful turnaround, leveraging this existing brand equity could be a powerful catalyst for regaining market share and customer loyalty. It's easier to rebuild a brand that people already know and recognize than to create one from scratch. So, we've laid out the significant challenges and the glimmers of hope. We've explored the bear case and the bull case.
Now, let's try to synthesize these points and look ahead, attempting to forecast what the next 3 years might hold for Beyond Meat stock. Predicting the future is never an exact science, especially in the volatile world of stocks, but we can outline some potential scenarios. Let's start with the most pessimistic outlook, Scenario 1, continued decline.
In this scenario, Beyond Meat sales continue to stagnate or even decline further. Competition intensifies, perhaps with a major competitor launching a truly disruptive product or a significant price war emerging. Profitability remains elusive, and the company continues to burn through cash. Under this scenario, we could see a further erosion of market share, potential difficulties in maintaining its stock exchange listing, or even an eventual acquisition at a very low valuation.
Key triggers for this scenario would include the failure of new product launches to gain traction, continued reliance on promotions to drive sales, or a major misstep in strategic execution that further alienates retailers or consumers. This is the path where the dead cat bounce proves to be just that, a brief flicker before the final descent.
Moving to a more moderate outcome, we have Scenario 2, stabilization and a slow turnaround. This is often considered the base case for many turnaround stories. Here, Beyond Meat manages to stabilize its sales, perhaps achieving modest, single-digit growth driven by new product introductions or renewed success in specific partnerships.
Margins begin to improve gradually as cost-cutting measures take effect and production efficiencies are realized. The company might not return to its former glory, but it avoids further significant decline and shows a clear, albeit slow, path toward profitability. In this scenario, the stock price would likely see a gradual recovery, reflecting renewed investor confidence but remaining significantly below its peak.
Investors would be watching key metrics like positive same-store sales, improving gross profit margins, and a reduction in operating losses. This is the scenario where the company finds its footing, but the journey back to significant growth is a long one. Finally, let's consider Scenario 3, a significant resurgence.
This is the optimistic outlook, the moonshot scenario. In this case, Beyond Meat successfully reinvents itself. Perhaps they launch a breakthrough product that significantly improves taste and texture, making it nearly indistinguishable from conventional meat. They might secure major new distribution deals, perhaps a game-changing partnership with a global food conglomerate or a massive expansion into untapped international markets.
Crucially, they achieve a clear and convincing path to sustainable profitability. If these elements align, we could see a substantial appreciation in the stock price, potentially returning to higher valuations if the fundamental performance truly justifies it. The moonshot factors here would be truly transformative innovations, massive global market penetration, or a significant shift in consumer behavior that overwhelmingly favors plant-based alternatives.
So, what factors will ultimately influence which of these scenarios plays out? Several key elements are at play. First and foremost is consumer adoption. The ultimate driver of success for Beyond Meat, and the entire plant-based industry, is whether consumers embrace these options more broadly and consistently, not just as a novelty but as a regular part of their diet.
Secondly, the competitive landscape will continue to be critical. How well Beyond Meat navigates and differentiates itself from rivals, both established and emerging, will determine its ability to hold on to and grow its market share. Third, the execution of its strategy by management is paramount. Their ability to innovate effectively, market their products convincingly, control costs, and adapt to changing market conditions will be the true test.
Fourth, macroeconomic conditions will play a role. Broader economic trends, consumer spending power, and inflation can all affect demand for premium food products like those offered by Beyond Meat. Finally, the regulatory environment, including any changes impacting food labeling, production standards, or health claims, could also influence the company's trajectory. It's a complex web of factors.
Predicting the future is never exact, especially in the volatile world of stocks, and particularly for a company like Beyond Meat, which operates in a dynamic and evolving market. But by understanding these forces, the potential headwinds and tailwinds, and the different scenarios that could unfold, we can make more informed assessments about Beyond Meat's potential over the next 3 years. So, for investors considering a position in Beyond Meat, what should they be watching closely?
It's crucial to monitor Beyond Meat's financial health. Over the next 3 years, keep a very close eye on revenue growth or at least stabilization. Are they finally stopping the bleeding in terms of sales? Equally important are gross profit margins. Are they improving, indicating better cost control and production? Net income and cash flow from operations are the ultimate measures of profitability, and investors will want to see these numbers moving in the right direction, even if it takes time. And of course, debt levels are always a concern for companies in turnaround situations.
Beyond the financials, investors need to assess Beyond Meat's competitive positioning. How can you tell if they are gaining or losing ground? Look at market share data as it becomes available, but also pay attention to new product introductions and how the market and consumers receive them. Are their new offerings hitting the mark, or are they falling flat? Pricing strategies are also a key indicator. Is Beyond Meat competing on price, or are they maintaining a premium, and if so, is the value proposition still there?
Staying attuned to consumer trends is also vital. The plant-based market is not static. Preferences can shift rapidly. Monitoring shifts in consumer attitudes towards taste, health, sustainability, and the overall perceived value of plant-based foods is essential. Industry reports and consumer sentiment surveys can provide valuable insights here. The management's track record is another critical factor.
For a company in a turnaround situation, the credibility and effectiveness of its leadership team are paramount. Investors will be looking for evidence that the current management has a coherent plan and the ability to execute it. Assessing the believability of their future guidance and their ability to meet stated goals will be key. When evaluating a company like Beyond Meat, traditional valuation metrics can be tricky, especially given its lack of consistent profitability.
Investors might look at metrics like the price-to-sales ratio or enterprise value to sales, which can give a sense of how the market values the company's revenue, even if profits aren't there yet. Comparing these metrics to historical averages and to those of its competitors can offer some perspective on whether the stock is indeed undervalued. And let's be clear, investing in a company like Beyond Meat, with its history of volatility and its current turnaround status, carries significant risk.
This is not a stock for the faint of heart. It's suitable only for investors with a high tolerance for volatility and the potential for substantial loss. It's the kind of investment where you need to be prepared for the possibility that things might not work out as hoped. For any potential turnaround to materialize, investors will likely need to exercise considerable patience. These situations rarely resolve themselves overnight.
It takes time for new strategies to take hold, for product cycles to play out, and for market sentiment to shift. So, if you're considering an investment, be prepared for a potentially long and bumpy road. What metrics do you prioritize when evaluating a turnaround stock like this? It's a question worth pondering for any investor looking to navigate these complex situations.
Beyond Meat, with its dramatic rise and fall, and its current precarious position, serves as a fascinating case study in the challenges and opportunities within the rapidly evolving plant-based food sector. The next 3 years will undoubtedly be a critical period for the company, and observing its journey will offer valuable insights into the future of alternative proteins.
The potential for a significant resurgence, while exciting, is also the most challenging to achieve. It requires not just incremental improvements but transformative changes. Think about a scenario where Beyond Meat doesn't just tweak its recipes but develops a wholly new generation of plant-based protein that truly mimics the taste and mouthfeel of animal meat with uncanny accuracy.
Imagine a product that cooks and browns just like beef, has the same juicy interior, and doesn't leave that lingering, sometimes artificial, aftertaste that some consumers still complain about. This isn't science fiction. Companies are investing heavily in R&D to achieve just that. If Beyond Meat were to lead this charge, it could fundamentally alter the perception of plant-based meat and unlock a much larger consumer base.
Let's consider the partnership angle for this optimistic scenario. A truly game-changing partnership could involve Beyond Meat collaborating with a major global food conglomerate, perhaps a Nestlé, a Unilever, or a Kraft Heinz. These behemoths have vast distribution networks, established manufacturing capabilities, and deep pockets.
A joint venture or a strategic alliance could provide Beyond Meat with the resources and reach to scale its operations exponentially, penetrate new markets, and leverage existing consumer trust in the parent company's brands. Alternatively, imagine a deal with a fast food giant that goes far beyond a limited-time offering. A permanent fixture on a global menu, like McDonald's McPlant, but perhaps with a more extensive rollout and deeper integration across various product lines.
This kind of commitment from a major player could provide immense sales volume and a powerful endorsement. And then there's the international expansion. While Beyond Meat has a presence in various countries, a truly aggressive push into emerging markets, where the demand for protein is growing rapidly and consumers might be more open to novel food solutions, could be a massive catalyst.
Think about markets in Asia or Latin America, where traditional meat consumption is high but also where there's growing awareness of health and environmental issues. If Beyond Meat can tailor its products and marketing to these specific cultural tastes and preferences, the growth potential is enormous. Crucially, for this resurgence to be sustainable, Beyond Meat must achieve a clear and convincing path to profitability.
This means not just cutting costs but fundamentally improving its operational efficiency, optimizing its supply chain, and achieving economies of scale. It means demonstrating that the business model can generate consistent profits from its sales, not just relying on stock appreciation or venture capital infusions. If they can show robust, growing margins and a healthy bottom line, the stock price could indeed reflect a much higher valuation, perhaps even approaching its former highs if the market believes the growth story is truly back on track.
Now, what factors will ultimately influence which of these scenarios plays out? It's a complex interplay of forces, but we can identify some key drivers. First and foremost is consumer adoption. This is the bedrock upon which the entire plant-based industry is built. We've talked about taste, texture, and health perceptions, but it's also about convenience and price.
For Beyond Meat to truly thrive, its products need to become not just an alternative but a preferred choice for a significant portion of the population, not just for a niche segment. This means overcoming the psychological barriers and making plant-based options as accessible and appealing as traditional meat. Secondly, the competitive landscape will continue to be a defining factor.
We've seen the rise of impossible foods, the proliferation of store brands, and the innovations from smaller startups. Beyond Meat isn't operating in a vacuum. Its ability to differentiate itself, to offer something truly unique or superior, and to maintain strong relationships with retailers and food service partners will be critical. A price war, if it erupts, could disproportionately hurt a company with higher production costs, so strategic pricing and value proposition are key.
Third, the execution of its strategy by management is paramount. This is where the rubber meets the road. Can the leadership team effectively navigate the challenges? Can they innovate at the pace required? Can they secure the necessary funding for growth if needed? Can they manage costs tightly and deliver on profitability targets?
A strong, agile, and visionary management team is essential for any company, but especially for one in a turnaround situation. Their ability to adapt to unforeseen market shifts and to make tough decisions will be under constant scrutiny. Fourth, macroeconomic conditions will inevitably play a role. We've seen how inflation can impact consumer spending on discretionary items, and food is no exception.
If the broader economy falters, consumers might revert to cheaper, more traditional protein sources, or cut back on premium plant-based options. Conversely, a strong economy with rising disposable incomes could bolster demand for products like Beyond Meat's. Interest rates also affect borrowing costs for companies and the attractiveness of equity investments, so broader economic health is always a backdrop.
Finally, the regulatory environment, while perhaps less immediate than other factors, can't be ignored. Changes in food labeling laws, regulations around health claims, or even evolving standards for plant-based meat production could impact the industry. For example, if regulations become stricter regarding what can be called meat, it could affect how companies like Beyond Meat position their products. Similarly, any shifts in government subsidies or incentives for alternative proteins could also influence the market.
So, by understanding these forces, the potential headwinds and tailwinds, and the different scenarios that could unfold, we can make more informed assessments about Beyond Meat's potential over the next 3 years. It's about looking beyond the current headlines and understanding the fundamental dynamics at play. Now, for investors considering a position in Beyond Meat, what should they be watching closely?
It's about building a scorecard, a set of key performance indicators that will tell you whether the company is moving closer to stabilization, a slow turnaround, or that elusive resurgence. First, Beyond Meat's financial health is paramount. Over the next 3 years, keep a very close eye on revenue growth or at least stabilization. Are they finally stopping the bleeding in terms of sales? This means looking beyond just headline revenue numbers and digging into the details. Are sales growing in key markets? Are they seeing repeat purchases?
Equally important are gross profit margins. Are they improving, indicating better cost control in production and sourcing? Remember, the cost of goods sold is a huge factor for food companies. Net income and cash flow from operations are the ultimate measures of profitability, and investors will want to see these numbers moving in the right direction, even if it takes time to turn positive. And of course, debt levels are always a concern for companies in turnaround situations.
High debt can restrict a company's flexibility and increase its risk profile. Monitoring the company's debt-to-equity ratio and its ability to service its debt will be crucial. Beyond the financials, investors need to assess Beyond Meat's competitive positioning. How can you tell if they are gaining or losing ground? Look at market share data as it becomes available, but also pay attention to new product introductions and how the market and consumers receive them.
Are their new offerings hitting the mark, or are they falling flat? Are competitors launching products that are clearly superior or significantly cheaper? Pricing strategies are also a key indicator. Is Beyond Meat competing on price, or are they maintaining a premium, and if so, is the value proposition still there? If they are forced to discount heavily just to move product, that's a sign of weakness.
Staying attuned to consumer trends is also vital. The plant-based market is not static. Preferences can shift rapidly. Monitoring shifts in consumer attitudes towards taste, health, sustainability, and the overall perceived value of plant-based foods is essential. Are consumers becoming more discerning? Are they looking for cleaner ingredients? Are they concerned about the processing of these foods? Industry reports and consumer sentiment surveys can provide valuable insights here, offering a qualitative overlay to the quantitative financial data.
The management's track record is another critical factor. For a company in a turnaround situation, the credibility and effectiveness of its leadership team are paramount. Investors will be looking for evidence that the current management has a coherent plan and the ability to execute it. Assessing the believability of their future guidance and their ability to meet stated goals will be key. This means scrutinizing earnings calls, investor presentations, and any public statements made by the company.
Are they transparent? Are they realistic? Do they seem to have a clear vision? When evaluating a company like Beyond Meat, traditional valuation metrics can be tricky, especially given its lack of consistent profitability. The price-to-earnings ratio is likely to be meaningless or astronomically high. Investors might look at metrics like the price-to-sales ratio or enterprise value to sales, which can give a sense of how the market values the company's revenue, even if profits aren't there yet.
Comparing these metrics to historical averages and to those of its competitors can offer some perspective on whether the stock is indeed undervalued relative to its peers and its own past performance. However, these are just starting points, they don't tell the whole story. And let's be clear, investing in a company like Beyond Meat, with its history of volatility and its current turnaround status, carries significant risk.
This is not a stock for the faint of heart. It's suitable only for investors with a high tolerance for volatility and the potential for substantial loss. It's the kind of investment where you need to be prepared for the possibility that things might not work out as hoped, and you could lose a significant portion, or even all, of your investment. It's crucial to only invest capital that you can afford to lose without jeopardizing your financial well-being.
For any potential turnaround to materialize, investors will likely need to exercise considerable patience. These situations rarely resolve themselves overnight. It takes time for new strategies to take hold, for product cycles to play out, and for market sentiment to shift. A company might show glimmers of hope in one quarter, only to face new headwinds in the next.
So, if you're considering an investment, be prepared for a potentially long and bumpy road. It's about believing in the long-term thesis and having the fortitude to ride out the inevitable ups and downs. So, what metrics do you prioritize when evaluating a turnaround stock like this? Is it the revenue stabilization? The margin improvement? The management's communication? Or is it the sheer potential of the market and the product innovation?
It's a question worth pondering for any investor looking to navigate these complex situations. Beyond Meat, with its dramatic rise and fall, and its current precarious position, serves as a fascinating case study in the challenges and opportunities within the rapidly evolving plant-based food sector. The next 3 years will undoubtedly be a critical period for the company, and observing its journey will offer valuable insights into the future of alternative proteins.